Welcome, beautiful and amazing people. This is the commercial to residential business setup. So I'm lucky enough to know a number of people, whether they own one property, 50 properties, or even hundreds of properties. And there's one thing that all of them have in common, whether it's the one property or the 50 or the hundreds. They all need to get the business set up correctly from the beginning. And I say this because you might think it's the people just starting out that need to maybe worry the most, but I've actually had more worry and concerns and advice asked of me from my friends with portfolios of around 50 properties. And this is because they were set up in the personal name. So there's a lot to be learned as to what type business you want, where you want to end up, what structure you're going to put it in, and how you're going to go about this. So whether you're setting up a development company, which is what I'm talking about here, or you're just in property in general, there's definitely some really good insights and advice here to help you regardless. Outcome. You have to start with the outcome. So what outcome do you want for your business? And this is going to be different for everyone. So no one person is going to want or desire the same outcome as the next person. I know we all want to get rich. That's probably a good outcome, but we all will have a different background, and the journey is going to be slightly different given where you're starting out. So I'll explain that later. But ultimately, you've got to start with what outcome you want to achieve. You need to know where you're heading, because if you don't know where you're heading, how do you know that you're going to get there? So we really have to understand what the outcome is, and in order to do that, you have to start with the end first. So we're going to focus on what you want to achieve, and then we can re-engineer that and look at the milestones that you've got to achieve to get there. And also, it's going to be setting realistic expectations. So often people overestimate what they can do in a year and underestimate what they can do in a lifetime. And whatever property strategy you choose and you decide to go with, it's going to take time. Now that's the big secret. Everything takes time. I was lucky enough to go out there and achieve this very, very quickly. Within 4 years, a multi-million-pound portfolio. Maybe the second year raising 100% funds and around sort of 70,000 in equity, and then the next one, I might be the exception, I'm certainly not the norm, going out raising £1 million and doing a project with £500,000 profit in. So that all comes down to your risk profile, which I'll cover later. So step one, understand what your end outcome is. And to help you, I'm going to run through a few options for you. Is your outcome to become financially free from one deal? Is your outcome just to be making 6 figures every year? Is your outcome to achieve 10 times more with less energy? So taking on one of the larger builds and developing an office into 10 or even 20 apartments instead of just doing that one buy-to-let for the whole year. Is it to develop and retain a £1 million portfolio, or you set your own level that you want to play at, a multi-million-pound portfolio? Is it to retire from just one project? And that is totally realistic and feasible and possible. Or is it to achieve all the above, but hands-free via leverage? So just to back up what I'm saying, how can you retire from one project? This is Never Hall, and we're converting this into 9 HMOs and 6 serviced accommodation, 6 serviced apartments. So in total, we're going to have 89 rooms to rent out. Off the back of that, we're going to have $500,000 in rent and around 200 grand positive cash flow every year. Now, 200,000 might be enough for some of you. Maybe you need a bit more. Hear someone shouting. So you really choose the level that you want to play at. And some of you might be saying, I don't have the money, George, or coming up with a number of different excuses. Now, I'm going to show you where I started from, which was with 0. And that was more than once. So you're only limited by your own belief and mindset. So if you believe you can, you can. If you believe you can't, you're 100% right. Now, this is one large project. I mean, people say you shouldn't do a scattergun approach. That's a lot of different houses all over the place. If you can have them all in one area, it's easier to manage. And certainly, if you're working with high net worth individuals, or you're joint venturing with them, they typically like to know they've got, rather than a few million spread out around one area, they've got one nice large apartment block where everything's in it. Is your outcome to achieve far more in a shorter space of time? Again, this is so possible. I went out and I found this, secured it, and I developed it within a year or around a year, and it wasn't 10 times, it was actually 20 times. And in the same year, I knew someone who was doing a bungalow conversion, a bungalow with a loft conversion, and basically I'd done 20 apartments in the same time that they'd put in for the planning for the loft and had converted one dwelling. Yep. So you really can do a lot more with less time, and we all have a finite amount of time on the planet, so it's up to you how you want to use that time. Is your outcome to develop a £1 million portfolio, or even a multi-million pound portfolio? I certainly didn't start with the £1 million portfolios. I started with something small and sensible, like a pub into 4 flats. And up north, the typical value was around 70,000. So that cash flows exceptionally well. If you are doing this model, you need to think about your exit. Now, there's certain property types or strategies that can make you a lot more money. So if you combined that with the niche of developing commercial to residential properties, you can really supersize and supercharge your results. So if you do normal flats, you've got a normal rent. If you do something called HMOs, houses of multiple occupancy, and you do it right, there's some great cash flow to be made. It's more profitable than a normal flat. And then if you do SA, which is serviced accommodation or holiday lets, you can actually really supercharge what would be a normal flat. So you're not limited to just developing into apartments or into houses. There's the extra strategy or the extra layer there that can really supercharge your returns. And when you're developing, one of the biggest keys to what you're going to do is the value of the property once it's finished. So this comes down to cash flow. Now, if the property is worth more, you're developing in a high-end area and it's maybe worth, say, £250,000 per apartment, but the rent is only, say, £1,000, it won't cash flow as well as somewhere where you develop into apartments and the standard at say 70,000 and the rent 600. So you can instantly see the rent is close to the value of the property, whereas with the higher end ones, the rent is at least half the value of the property. Does that make sense? So in them scenarios, you'd plan to develop and sell unless you were super loaded and you wanted to buy the properties for capital growth rather than cash flow. So a lot of people do that in London, and there's a lot of people with more money and they just need to park it somewhere safe, and that's why prices rise up. And everyone is in a different situation and a different position. So what works for one person might not work for another person. So this is when you find a deal and you think it's not right for you, you don't have to just walk away. You've put a lot of time, money and energy into there. So part of your strategy or business plan could be that you're going to deal package. You're going to package that deal up and see if you can sell it to another investor who it does fit for. So hopefully that's given you a bit more insight and ideas and inspiration there. How to make 6 figures a year. So if your goal is to be making 6 figures every year through developing, you've got 2 options there. One is the cash flow from the rent, and the other one is developing to sell. So when you're doing that, you need to understand how many business partners you've got in the deal. So we're looking at a large one here, and that's over $500,000 profit. So you know that with tax, you probably want 5 equal shareholder partners in it to be making your 6 figures. Whereas it might be you're lucky enough to buy this yourself. Happy days. We're all at different places in our journey. Now, if you are saying, look, George, I'm not that greedy. I'm a Yorkshireman like yourself. The cost of living up here isn't too expensive. I can live off, say, 30,000. I just want to get out of my job. Okay. So, and it might be that the capital you have to invest is quite limited. So it might be the capital that you've got is only, say, 100,000. So you might be going after a pub. Now, if you're going after a pub and the pub has 80,000 profit in it, let's say, and you're converting it into 4 apartments. Now, if you're wanting 30,000 and let's say that 100,000 isn't yours, it's an investor's, and let's say the investor wants 50%, and let's say that you then got into the deal with a friend who's a deal sourcer or your business partner. So there's now 3 of you. It's all about understanding from day one what the level of partnership is, so that percentage share in the deal. So if there's 80,000 and you're getting 40 and that's split 2 ways, it's only going to be 20. So hopefully the penny's going to start to drop about how you guys can engineer your own business plan. Usually I'll sit down, do a one-to-one with people and look at all the different avenues and really spell it out as to what you need to do in order to succeed and in order to hit these milestones. And then looking at whether you're employed full-time or your full-time property, how much capital you have, how much you want to make, you can then create what's called a realistic business plan rather than, and I'm all for people going out and doing the extraordinary and really having amazing results. I certainly did it. A lot of my friends have certainly done it, but not everyone is willing to go out and do what's required to get there. And I say that because it is 100% possible, but the amount of hours and hard work that I put into this to get going in the first place to get started and then to maintain it and then to grow it is quite phenomenal. And not everyone has that drive. So a lot of what you want to achieve is going to come from your inner why. So that's something you have to write down. I've not put it on here because it's bandied around quite a bit, but it's certainly your why. You need to understand what your why is, why are you doing this, why you're prepared to go through the pain barrier to get where you need to get to. Company setup basics. So we've only got time to cover some of the top level basic elements that you guys need to think about here. And one of them is, are you a limited company or a sole trader? Both have the benefits and both have the downsides. My advice, or people ask me, what would you do? And it is different for everyone. Everyone's situation is completely different to the next person. So it's all completely relevant to what your outcome is. Now, if you're only doing one or two, it might be that a sole trader's better because you can get a cheaper mortgage rate in your personal name. If it's the sheer fact that you are actually going to be developing and you're going to be a development company and you're going to get multiple properties, then most certainly a limited company is my advice. And I need to put a disclaimer out there that I'm not a financial advisor and don't take any advice that I'm saying on here. It's just for guidance only, before I forget. But certainly that's what I've done, and the reason behind that is because it's limited liability. So when you're developing, if something goes wrong, there's a limited liability within the company. They can't always go after all of your personal assets. Now you have to be careful because that's the perception that a lot of people have. In fact, when you're doing a development, you still give a certain level of personal guarantee to the bank which falls outside of the limited company. So you have to be careful with that and read it. It's very uncommon or unlikely that banks are going to give you all the money with no personal commitment or liability or skin in the game, as they call it. Before the recession, you could get away with it. Now it is very hard to get them type of agreements. Another reason with a sole trader is, say you're just doing one house and it's a mansion, it might be that you want to do that and live in it yourself for a period of time before you sell it, so you haven't got the capital gains tax. So there's different reasons behind each company. Typically I've always set up limited companies. It's just so much easier for for a multitude of reasons. Basically the safety, the shares, the shareholders agreement, which we'll come on to later. So that's one thing you need to think about. The second thing is the bank account. Now, so many people go out and find the property, and after you've found it, you've got so much to do with getting that property off the ground. I say property, the development. Now, the last thing you want to be doing is waiting for 3 weeks to get an appointment with your bank manager to set up your bank account, to then get the funds in, to get all the documentation from the limited company that you need, etc., etc. So this is all about being ready. So it's not get ready, it's be ready. And the sooner you can have everything in place, the less stress, hassle and complication you're going to create for yourself later on, because your full focus is getting that property over the line and securing it. And you really don't want to be falling into the entrepreneur's trap of ending up using your own bank account as the business account, which a lot of people can fall foul of. And we all have our own strengths and weaknesses, so it's always best to make sure you get things set up correctly from day one. The next thing you might want to look at is your website. Now this is for credibility, and it goes deeper than the website. It's your social media as well. And this might just, if you certainly have done a few projects before, it might just help add a little bit of a weight and help you when you're putting your offer in for the property. So people see that you're established, you're credible, and you mean business, you're serious. And that's the same with the business cards and the stationery. So these are just some of the smaller stuff there, but it's still relevant to make sure everything's set up. Now, the biggest one that you really want to be thinking about and getting set up and getting in place is the joint venture agreement or the shareholders agreement. Now, a lot of people will rush out and they hear the word joint venture bandied around all over. So they'll get a joint venture agreement. Well, the correct document that you want is the shareholders agreement, because this is the legal document if you set up a limited company that's going to override any joint venture agreement. The joint venture agreement's good for the initial conversation and a nice, simple stating what's expected of each other and what you want to achieve, making sure you're both aligned, etc., to get that down on paper for a starting point. And then, once you're happy with that, you can spend the money on the shareholders agreement to make it more robust, more detailed, and more legal. And then, with any business, you do need a business plan. And a lot of people, some people don't know where to start. I'll put my hands up. When I first got started, I didn't know how to do a business plan. I paid someone to help me with my business plan. And the person who asked me for my business plan, the first person, Alan, who lent me 100% funding for my development, said to me, he said, "I've been in business a long time, George, and I've never seen a business plan that's gone right. None of them have been, correct as they were written." But he said, what it does is proves to me that you've thought about this business. You've looked at what's called, say, your SWOT analysis, your strengths, your weaknesses, your opportunities, and your threats. And you can understand any potential problem before you hit it. One of the main benefits with this is helping you to analyse your cash flow as well. But with developments, if you go into the bank, there's another layer there where a quantity surveyor, a QS, can help you. So that's covered a bit later on. But certainly just starting out, working out where you want to be, reverse engineering it, and understanding how you're going to get there and what achievable little milestones you're going to hit on the way. Now, you will be starting from a different starting point from myself, and we are all in different situations and different points within our life and our journey. So what works for one person might not work for another. There might be someone saying that they're like myself when I started, 21-year-old with zero money, in which case I got started with a bank loan and bought one in the auction for $6,500 and made 10 grand off it. Then I went to educate myself. So that's the other factor. What experience do you have? Do you have any relevant trade qualifications that's going to help you? Or are you in the banking and finance industry? Or are you a letting agency? So again, your current situation with your previous experience and comfort level, it might be that you've got a string of buy-to-lets already and you're well established. It might be that the buy-to-lets are highly geared or they're mortgage free. So everyone's in a different situation. And the good news is it doesn't matter where you are, anything is possible. You just have to believe it. I went out and raised 100% funding for my development. And if you've got the mindset that you can't do this because you haven't got the money, then you're setting yourself up to fail. That you need to learn to ask better questions. And the question is, how am I going to get the money? So that's what we need to work on. That's what you need to work on, figuring that point out. And back then, I never had all this social media. We're in the dark age. I think our phones could be classed as lethal weapons back then. So you've never been in a stronger position in time at the moment than where we are now, with what's at your fingertips, literally on your phones, who you can connect to, reach out to. So there is so much opportunity there. And then sometimes you might, this is going to drop into your risk profile, you might not want to start off doing the big ones. And there's nothing wrong with that. I started off with the small flat, and then a small pub into 4 flats, and then I just knew where I wanted to be in life. I just knew I wanted to go big. And the only thing stopping me was me and my own mindset. So I went out there and found a 30-bed care home to convert into the 20 apartments. Now for me, everyone was telling me I couldn't do this. Absolutely everyone. There was only one person actually that believed in me because I'd done something, and whether they fully believed or not, I don't know, but that was my mum. Sometimes your mums are there to protect you and look after you, but I'm just so grateful and so lucky that my mum was the only person that supported me, and she did. So I actually managed to make it happen. I went out there and I raised £1 million, about 275 to buy it, and then close to the 3/4 to develop it. Valued up at £1.5 million. Could have got a higher valuation at the time, but I didn't. So just that belief and that sheer pain and thick skin and resilience. Do you have that? If you don't, there's nothing wrong with that. I'm not saying you have to do the big ones. I'm not saying you have to do it within 4 years. You just set what you're comfortable with, and if you're not comfortable there, then that's fine. But you need to understand that from the beginning, because your business plan and your journey is going to look slightly different. You'll still get there. You're just doing it in a more safer manner over a longer period. There is one bit of advice that I'll give everyone, and that is, I've worked with some people that have had the money and they were just super, super cautious, and that really held them back. They just wanted the perfect deal. Now in life, the perfect deal isn't there. So looking back now, I even went bankrupt. So yeah, went bankrupt and lost everything after I built that £3.6 million company. So it doesn't matter what situation you're in. The only thing that's ever going to hold you back is you. I had the drive, the mindset, the ambition, the determination and the belief to go out and make it happen. And I did. And then the recession, being young, never been through one before, hiring my friends from college and university that were younger than me. I asked them to ask the parents what a recession was. Saved me explaining it, because I certainly hadn't been through one before. They definitely haven't. So it's a case of wherever you feel you are now, you need to have 100% belief and conviction that you can get there, because otherwise you're going to be holding yourself back. You're going to be setting yourself up for fail. So if you feel there's something there holding you back, please reach out to me. I'm on most platforms, social media, Facebook, LinkedIn, etc., etc. Our website's got a phone number to our office on. Just reach out, connect with us, and time permitting, I've got to put this out there because I'm always saying I'll help people, but it is time permitting and within reason. I'm more than happy to help people, and we'll work through and find out what it is that's stopping you. So I've already touched on a lot of these, but just a little recap. It's what outcome do you want? So really understand what outcome you want, what time frame you're going to achieve that in, and then within that time frame, there's really the capital that you need. So you need a game plan, a whole business plan, a whole marketing plan within your business plan, just on raising that finance. And that's why we've got the second step in the process, which is finance raising, because that is totally key critical to so many people in this journey. And even if you have the finance, it is still key critical to so many people. So you then drop on to experience. So like I've said, some people might have their experience in the finance sector. Well, if that's you and you're in a full-time job, it might be that you need to focus on not going outsourcing in your spare time, but joint venturing with someone that's a full-time sourcer. So they've got the time and no money. You've obviously got the money but no time. So it's not always about thinking how you can do this, it's thinking how you can do this in a smarter way. So time frame is experience and the time frame and the outcome, all these roll into one. And then it's risk profile. So like I mentioned, there was some friends of mine and they had the money and they were full-time working, and we were looking at projects with them, but the perfect risk-free project is super hard to find. If something's a no-brainer, it tends to go overnight. So you need to ask yourself, how quick can you move? And this is it. Especially if this is new to you, most people will not move quickly. Now, this is one of the big factors that we'll cover in the finance raising. You need to pre-qualify people. Yep, people tell you you've got the money, people say, yep, go for it. Everyone's pushing you and you think, great, I've got this amazing support. You get it, and then for whatever reason, investors just drop like flies, or your family members even that have said they'll back you and work with you, suddenly the goldfish has died and they just don't want to do it anymore. So again, you have to be super careful there and understand not only what your risk profile is, but what the risk profile is of any business partner you have or investors. Now that leads on to the burn rate. The burn rate is your personal amount of money. So if you're quitting your job, and there's a lot of people out there that advocate quit your job, go into this full time, you'll make it happen, and I did that, and that was my decision, and I made it happen. For some people, especially what they're going into, because there's different strategies, I always give people straight, honest, frank advice there. And you have to understand what your burn rate is. And people I've got the course here, so I've got a 5-step process course, and it does help you, it does train you, it sets it all up and makes you understand what's needed to do this. But equally, you're going to have a finite amount of money to support you if you do quit your job while you're going into this. And for whatever reason, a lot of people will give up when it gets hard, or they'll give up when they don't get the results. Not many people truly want it, and they want it bad enough that they're going to commit and dedicate themselves to it no matter how long it takes. So you need to understand what you're willing to do, what your risk profile is, and how long you've got, so your burn rate is right up there with oxygen, to make this happen. And also understand that business is not a straight line. It is never a straight line going upwards. It is a roller coaster. You have your ups, you have your downs, in developments you have famine and feast. Sometimes you might think you've got enough money to do it, and something might come up and you have to tuck into your emergency reserves. And in them situations, you're in a bit of a famine because everything's all in. And it's only when you sell it, so you're struggling sometimes until the project's finished, and then you might have a big lump of 100k or $500,000, $1 million, whatever. It depends what level you play at. And it's so crazy. A lot of my friends are out there that have experienced this. So you've got to understand what level you're playing at. And people often ask me, why do you open up your black book of secrets? Why do you share this with everyone? If you've got a blueprint for printing money, why share it with people? Why help people? And there's a couple of reasons to that. The first one is someone helped me. So Alan Hall from the Isle of Man helped me get started when I felt like well, obviously I did. I believed in myself. You've always got to start by believing in yourself. If you don't, who else will? So, but I knew that I just knew I was going to do it. But understanding why someone would lend the money to you, that's another thing in itself. But he did. He had belief in me. He gave me the opportunity, and it's a law of reciprocity. So someone's helped me, and that's resonated with me for my whole life. I want to help other people. I maybe have enough already, so it's all about want and need. I don't need any more property. It's purely want for me. I enjoy doing what I do. I absolutely love doing what I'm doing. It's my passion. And so I'm also happy to help give back and pay it forward. The second thing is multiple streams of income. So like I said, famine and feast sometimes with the developments. It's nice to have a training and education company where I've got another income stream. So I'm not, if say there is a massive recession and or there's World War III, I've possibly still got another income stream generating if for whatever reason the property market just slows down. So it is sort of a two-pronged approach here. So that's why I'm happy to share with you. And there is a third reason, and that is you can go so much further by joint venturing and working with people. And there was a billionaire Chinese investor who was asked, his name eludes me, I can't remember his name, and he was asked, how did you become a billionaire? And he said, basically, a lot of people came to me offering their businesses or to be partners with me, and he said, instead of going 50-50 with them, he'd go 60-40, but he'd give them the 60%. So he took a lesser share in it. So even though he had the money and the experience, a good bit of experience, he knew by giving that extra 60% to the people, they were really going to be super driven, supercharged, and super determined to go out there, deliver, and make this happen. And he wasn't being greedy. There was more than enough to go around. So it's maybe a smaller slice of the pie, but a huge, bigger pie, to use that analogy. And that certainly worked for him. So with commercial to residential developments, it is a shame, an absolutely shame, to see the high streets just decaying, or really nice, lovely buildings just sat there when we've got a housing shortage, when we've got homeless people and a huge demand and people crying out for quality housing. And that's what we're doing. We're solving a major problem in the UK. We're providing quality housing to people that need it. And the more we do, hopefully the lower the cost will remain for people. So it's not always about the maximum profit, it's about doing what the market wants, what's gonna get you the exit, so you're becoming a sustainable developer for the long term. So there's a few reasons. Really hope that's helped. And the time frame, as always, that really does need to fit in with your expectations, and it all needs to be managed correctly. But hopefully I've given you enough of a high level insight as to how to start to plan your journey. And there you have it. So the high level overview of the business setup. I really hope that there's some great insights, tips, knowledge, shares, certainly giving you a lot to think about there. And it is honestly so key critical for you to get your business set up right from the start. Because I know a lot of people that get further down the lane or the track and they develop complications or issues, and it's because they haven't thought through methodically or set up correctly the business. And that's the entrepreneur in us. Sometimes we just want to get out there, kick the door out and make it happen. But honestly, that little bit of planning is going to save you so much time in the long run, and it's also going to stop you getting overwhelmed or even beating yourself up, feeling a bit down or frustrated when it doesn't happen overnight. And it's understanding what you need to do, how you need to do it, and having small achievable milestones so you know you're progressing in the right direction. So if this has really helped you, please give us a like, a share, a comment, whatever platform we're on. It's truly appreciated, and I will see you on the next one, which is raising finance. So there's some really good quality information and insights. So as always, thank you for joining us, and I look forward to seeing you on the next episode.